Hello guys, this is Money Effects, and in today's video I'm going to be doing a full breakdown video about my ultimate entry strategy called the steering breaker concept. With this incredible strategy, I've been able to catch so many trends in the market with insane accuracy. Also in this video, I'm going to be providing you a lot of evidence of why steering breaker is way better than ICT's breaker structure, which is the most used method of entering the market today. But first, I need to let you guys know this is the first time ever that I'm going to be teaching this concept publicly. I've taught only a handful of people over the years for a reason I probably should mention in this video. So I'd appreciate if you like this video, to subscribe so you can get more content like this in the future. So all that being said, let's get into the video. Now first off, a lot of you might be asking, what the hell is a steering breaker? The steering breaker concept is simply a method of entering the market with precise accuracy. This method was actually developed by my friend and I about 2 years ago. We were constantly losing trades using ICT's breaker structure, so we decided to develop our own entry model by backtesting the market for 3 months. So yeah, we eventually came up with steering breaker, and we've been using this to get into trades ever since. So basically the way it works is very simple. But first we need to talk about ICT breakup structure. So in a bullish trend, we have price coming all the way down, and suddenly there's a reversal, right? There's a break of the market structure. So price goes above this last high, most times retraces all the way down and starts going up. So basically that's the way ICT's breaker structure works in a bullish trend. Now for a bearish trend, we have price going all the way up, and suddenly you have a reversal. So price goes below the last low and expands all the way up and start going down. So this is basically ICT breaker structure in a bearish trend. Now the way steering breaker works is slightly different. So for a bullish trend, we have price coming all the way down as well. Then we have a break of structure. So for ICTs, it's just only one single high, but for steering breaker, it has to break 2 highs to be valid. So price breaks 2 high, comes all the way down, and price starts going up. Now instead of price just breaking one high, price has to break 2 high to be a valid steering breaker. And you have your order block right here. Then this is for a bullish trend. Now for a bearish trend, you have price going all the way up, then price starts coming down, but price has to break 2 lows in order to become a valid steering breaker. So we have our order block right here, and now you have price breaking 2 lows in order to become a valid steering breaker. Now first off, we're going to be checking out gold. This is a monthly time frame. So I'm just going to go down to a weekly time frame in order to get structure. Yeah, I think okay, let's talk about this region right here up until this place. Okay, so in this weekly time frame, price has been going all the way up, then price add a little retracement right here, and price went up, and there was a mitigation, meaning price went below this certain low, because this low was, to the institutions, this low is just a liquidity, right? So price broke this low, came all the way down. I don't really think it came up to this. It was only this FVG. So if you were to enter into this trade using ICT, you would have used this FVG and this outlier. But this is not the point I'm trying to make. I'm just trying to find a structure where I can show you an example of steering breaker. So price came all the way down. It mitigated all the way down. So price will keep going in the bullish direction, right? Price will keep going up. So let's go down to a lower time frame. So now we have let me just highlight the pattern right here. We have this bullish uptrend, and we add this retracement all the way down. The mitigation price broke this low on a weekly time frame. So we have this mitigation all the way down, and price continued going all the way up. So in this kind of instance, this retracement you can just set as a range. Then your price came all the way down, and now you're looking for a break of market structure which you can use to enter into the market before the price starts going up, right? So now, yes, I think this should be an example of a steering breaker. So on a 4-hour chart, yeah, you can see the structure right here. This is a low. You could call it a sell stop. This is a low. This as well is a low. So you can see this all about right here. So price came all the way down. I think I need to explain the reason why price went all the way up, came down, went up, and tapped out this low in order to enter into this order block and start going up. So it's very simple. If you go onto the higher time frame, on the daily time frame, so if price comes all the way down and price goes up, price goes down, price goes up, but does not break any high, this low is known as a liquidity. So price sometimes do come down, most times do come down and starts going up. So this zone is known as a mitigation zone, or you could call it a mitigation block, wherever. So you can just try to set your entry inside the mitigation zone. So if price doesn't break any structure on the far side, that low becomes a liquidity. So it becomes a liquidity. So price, the big banks, they push price all the way down below that low in order to tap out those who have entered in this region. So that is basically how it works. So you can see on the daily time frame, price did not break any structure. So automatically this became a liquidity. Okay. So let's go back to the 4-hour time frame. So this is a very nice example of a steering breaker. So price break two highs. So this order block became a valid steering breaker. So this is a 4-hour order block. Just gotta highlight this right here. So price start going up. If you we're gonna get into this trade, this will be your TP, right? So price went all the way up and tapped the TP. So let's look for more examples, right? Let's find some more examples. I think there should be some examples on along this trend on the 1 hour time frame. So let's get us on the 1 hour time frame. You can call this or the structures, you can call it range. So price went up, down, up, just kept going up, retracing, going up. So you just have to look for somewhere where I think I found one. Yeah, this right here. So this is also steering breaker as well. So we have our first high, then we have the second high. And as you can see right here, this other block is a valid steering breaker. And guys, I should let you know I'm not trying to cherry pick any structure. You can see for yourself. I'm checking it out. You can go to the chart yourself after watching this video and just check it out. You could just back test, you're gonna find it. You're gonna find different examples where you see price, breaking two highs, price breaking two lows, and that order block rather, actually becoming a very, very, very valid order block. So we just call it the steering breaker. So you can see price respected this order block right here and continued the bullish momentum. And I think this should be one right here. Yeah. I think I got into this trade. I don't really remember if I got into this trade. I got into this trade. I think I made about one ratio. I don't actually remember. Um, let's go on to the next one. Okay, gonna cancel this. Okay, I think I got into two trades around this area. So let's go into 30 minutes time frame. So this in itself is this in itself is a range because you can see structures. So let's just highlight the eyes. So if you just take a closer look, you will see the first eye and the second eye. So in this very tiny range, price went up, came all the way down, then I think it went up, came down, went up, came all the way down. Yeah. Then went up again, came all the way down, then went up and came down. So price broke this first eye, then broke the second eye. Then price retraced all the way down. Price went up, and price came all the way down back to our Steven breaker. So this is a valid Steven breaker. This is just an example of validity. Now I keep showing you a lot of examples even in the small time frame because this is the 30 minutes time frame. We haven't even gone to the 50 minutes. We haven't gone to the 5 minutes, even the 1 minute. We haven't gone to 1 minute. But because, for the sake of time, I'm just gonna pick only a few because we still have to go to other peers. I have to show you that this doesn't only work on gold. This works on all trading instruments, even crypto, indices, commodities. It could be euro, pounds, whatever. It works everywhere. It works everywhere. Okay, I think I need to show you why this is very crazy because some of you might not know actually how incredible this is. So let me just show you how many ratio you could have made on this trade alone. Yeah. So gonna be, let's try to get our TP. I think TP should be right here. So on this one trade alone, you could have made 126, meaning if you had put $10 into this trade, you could have made about $260. If you had put about $100 into this trade, you could have made $2,600. So it's very crazy. It's a very, very, very high ratio. So now just on this range, we've gotten like 3 different entries on the higher time frame level. I could go to like 5 minutes or 15 minutes, but I just want to, use the higher time frame structures because that would be more appropriate. Let's try to figure out if we can find other entries on the higher time frame. So let's try checking out this range. So price came all the way up, price mitigated down, and price continued going all the way up. So let's try see if we can catch any entries here on the higher time frame level. So let me go down to the 4 hour. Should go down to the 4 hour. Okay. So I think we have this right here. We have this price broke this low. Then price broke the low. So it makes it a valid Steven breaker. It makes this auto block a valid Steven breaker. But this, even though it's on the higher time frame, guys, this is should be like a short-term trade, because when you take a look from the higher time frame level, let's go to like a week so we can have a more valid perspective. So when you go to the weekly time frame, where do you think you should set ICTP? Should it be this? Should it be this? No, it should be this low wire. So your TP should be this low. So let's go back to the 4 hour. So now you have your steering breaker, and this should be your TP right here. So you don't set your TP all the way down. It should just be this low, because you know this on the hour time frame, on the 1 week, on the daily is a liquidity. So price retested this order block, came all the way down, and tapped at this low. Yeah, so I'd like to show you guys one more example before we move on to the next currency. So this is a 2 hour chart. This is still gold. I just want to show you guys right here. So let me first draw a pattern. So we have price coming all the way down, then going up, then coming down, going up, coming all the way down before it starts going up. And this, you guys might find this kind of like funny, because there are a lot of sell stops, you know, there are a lot of eyes in the market. But if you are someone who truly understands how ICT work, you understand why the reason why I only drew only 2 eyes, because price came all the way from this high all the way down. I cannot include this high because it's inside this range. So price has to break this low in order to become a valid high. So price came all the way, not even this place. Price came all the way down, then price went up. So now before I can use the next high, price needs to break this low. So price came all the way down, then went up, then came all the way down. So now we have only 3 eyes. No, we have just 4 eyes in this range. So we have just 4 eyes in this range. So now this is what I want to show you guys. Just this order block right here. So this is a valid Steven breaker. Let's take a closer look. So you can see this order block broke this eye, then broke this eye. So this is a 2 hour order block, and this order block broke this eye and this eye, making it a valid Steven breaker. So the best way to prove to you guys that Steven breaker actually work is to go onto the higher time frame and see if it actually, you know, if price actually respects Steven breaker on the higher time frame. So that's one of the reason I'm not going into smaller time frames, because if I'm going to go into smaller time frames, it's going to take a lot of while. But higher time frame, you can actually see this really works. So this is a monthly time frame on the USDJPY, and you can see price as we're going all the way up for many months. Price has been going bullish and up onto this point. So you can see price came price went up, came down, went up, came down, went up, came down. You can see this black candle right here. So that was a retracement. So price came down and went all the way up, and price broke 2 lows. Guys, this is a monthly time frame. Okay, this is a monthly time frame. So price broke 2 lows, and I should let you guys know this in particular is just one range. Because some of you might think this is how the range goes. No, this is wrong. Because if you look at it up close, you can see that price, this eye, let's take a closer look. You're gonna see that this eye is below this eye. So this eye is inside this range. So this is just a single range. So if you're gonna be entering, I know you can, no one's gonna set an entry in a 1 month time frame. You can only use this for buyers. Okay. So let's just use it for example. If you're gonna set your TP is gonna be right here. Your TP is gonna be right here. So this is a monthly time frame, and you can see price broke two lows. So this is a valid Steven breaker. So this is a valid Steven breaker on the monthly time frame. Okay. So let's go down to 1 week time frame if we can find any entries. Just gonna be using the higher time frames. So let's see. I don't think I can find any Steven breaker here. So let's go back down to the daily time frame. Okay. So this is a 4-hour chart on the USDJPY. So this is our monthly order block, and you can see price went all the way up, tapped into the monthly order block, came all the way down, and still went up. So now the reason why price went above this is very simple. So let's go back to our monthly time frame. Okay, this is just another block. Let's refine down to the 1 week time frame. So in this case, we have to check for FVGs. We have to check for ICT FVGs. So you can see price. There's this FVG right here. No, so this is a monthly time frame. So we really have to be careful. You have to analyze it in order to get your bias. So price came into this order block, went down, and continued going up, right? So let's highlight our FVGs. So this is one FVG and this is the second FVG. So just with this information on this on the weekly time frame, I know price would definitely go up into this FVG. I know price, even if price doesn't tap this weekly order block, price will definitely come to this FVG. Let's go down to the one day time frame just to make it more clear. So you can see this is a liquidity. The banks are gonna push price up, whatever the case may be, because this is a 1 month order block. So this is a liquidity, right? This is a liquidity. This is a liquidity, and you can see this big FVG in the daily time frame. Even though price didn't come all the way to this daily FVG, as you saw on the weekly time frame, price came all the way up. So on the weekly time frame, price came all the way up and tapped into the FVG. So it was just immediately price tapped into the FVG, price started going down, right? Price started going down. So let's go back to the daily time frame. So on the daily time frame, this is basically a liquidity. This high right here is basically liquidity. This as well is a liquidity. So immediately price tapped into this FVG on the weekly time frame, price will start coming all the way down. So how do you enter into this higher time frame? You enter into this higher time frame by refining down. So we're gonna refine down into a 4-hour time frame to see if we can catch any entries. So this is our 4-hour time frame, and so you can see price was coming all the way up. It came down, it went up, it came down, it went up, and came down right here, and went up, came down, went up, and there was a break in market structure. So this is a valid Steven breaker. This is a valid Steven breaker. So price broke this high right here. Let's take a closer look. So price broke this high, right? I mean this low, sorry. Price broke this low and price broke this low as well. So this is a valid stepping breaker on the 4-hour time frame. This is a valid stepping breaker. So this is a valid stepping breaker. So I could just, get into this trade and I could just find the next liquidity, right? I could just find the next liquidity. I think I should go onto the daily time frame to try see if I can get liquidity. Okay. So there's very high probability. There's a very high certainty that price will go below this low, because if you check on, I think, the weekly time frame, you can see price did not break any structure. So this basically is a liquidity. Okay. So this is a liquidity. So price is definitely going to come below this low. That's on the weekly time frame. Let's go back to the 4-hour time frame. So you could set your TP right here. So this is just 1 to 8 risk to reward. It's very small, but if you are a trader who's been trading for a lot of years, that's a very, very, very high risk to reward ratio. We're talking about 4 hours here. But if you want to go on a long term, you can go up to like on a monthly time frame. Let's go to monthly time frame. Let's say you want to like leave this trade for a very, very, very long time. You could, set your TP right here. You can set the TP right here. So you can set your TP right here. So I told you this itself is a range. Price came all the way down, and this is another range. And I'm gonna be giving you guys another confirmation why price is eventually gonna come all the way to this point. So now, just to give you a bigger perspective, let's go up to the 3-month time frame. 3 months time frame. So you can see price right here. This is a very big fair value gap. So price will definitely come all the way down into this fair value gap. And another reason is the PDR metric. So this itself, okay, so this is a range. Price came all the way down and price went up. So in order for price to keep going up on the 3-month time frame, price has to come all the way down into the discount. So this is a discount, this is a premium. So price has to come all the way down, tap this liquidity before it can start going up. So price is definitely gonna come all the way down to this place. So that's just my analysis for USDJPY. Okay, let's try if we can get another entry on the 4-hour time frame. Okay. Okay, yeah, this right here. So price. So if you take a look at the weekly time frame, you will know that price still has to go all the way up in order to tap into this FVG, this imbalance, right? So you know this I is a fake out, right? This I is a fake out. So price is definitely going to come all the way up to tap this I in order to tap into this FVG. So you can get into this expansion all the way up onto this place. So you can just set this as your TP. So let's go down to the 4-hour, and you're gonna find out that this order block right here is a stepping breaker. This order block is a stepping breaker. Because why? Price broke this high and price broke this high. You could refine down, you could refine down this order block because this is a 4-hour time frame. Or you could use it as a form of bias all the way up. However you want to do with stepping breaker, you're very sure the price is going to go all the way up because this is a very, very, very valid stepping breaker. So moving on to GPBUSD, this is a 3-hour chart, and we have price, on long term going all the way bullish, right? So price expands all the way up retraces, expand all the way up, retraces, and keeps going bullish. So this in particular is where I want to show you guys. So this is a 3-hour time frame, right? So this certain order block is a valid steering breaker. So why is it a valid steering breaker? Because it broke this high right here, and it broke this high. So if we're going to make a pattern out of this range, is just gonna be like this. So price went down, up, came all the way down, went up, came all the way down, went up, just came all the way down, went up, came all the way down, went up. Okay, actually went up in this actually this is the eye I'm supposed to use. So price came all the way down. I'm not going to use this low because this high was broken by this high, so I'm going to use this low, then go up, and I'm going to go down and go up and down. So this is actually the eye I'm supposed to use, this high right here. So this is the eye I'm supposed to use. So you can see price broke two separate eyes, making this order block a valid order block. So you could just get into this market and use this eye as your TP, or you could just look into long term. Yeah, I think this is about um 1 to, let's say a 1 to 10 risk to reward ratio. This is about 1 to 10 risk to reward ratio. So this is about 1 to 10 ratio. And mind you guys, this is a 3-hour time frame. Now on a 3-hour time frame, using the steering breaker, you can find a 1 ratio time. That's crazy, guys. Now moving forward, this is the 1-hour chart. We're still in pounds, and I'm just gonna show this setup right here. This is the 1-hour time frame. So price came all the way down. On the long term, price has been coming all the way down. Price has been bearish up onto this point right here. So price has been coming all the way down up onto this point right here. So price starts going up. So now this is now just using steering breaker, this is a confirmation that price is now in a reversal. So if you take a look at this on the 1-hour time frame, you're gonna see this setup right here. So price broke this high. This is a high. So price broke this high as well. But I don't think price actually came all the way down to the other block. Let's just check. Okay. I don't think price came all the way down to our block. I think it's just like, okay, this is like about 85. This is about 68. So price didn't actually come all the way down to this other block, but you can see price respected it. Price didn't go below the other blocks. So this other block is a valid steering breaker, even though price didn't come all the way down to retest it. So now we're left to look for a way to get into the market. So I showed you a steering breaker right here. Now price has come all the way up. So this is another example I found on the 1-hour time frame. So we check this right here up close. You can see price broke not just one high, price broke this high, and price broke this high as well. You could also include this, but it doesn't really matter. What matters is price broke two different highs, so making this order block a valid order block. So this is on a 1-hour time frame. So now if you are gonna like look forward into the long term, this is gonna be a massive risk to reward ratio. And mind you guys, this is a 1-hour time frame, so there's gonna be a massive risk to reward ratio. So let me go up into the higher time frame. Let's go to like a daily time frame. So now we're trying to get a very massive risk to reward ratio. So we gotta put our TP in a very high place. So you just put your TP right here. So this is a reversal, right? This is a reversal. So you could likely put your TP. If I was gonna get into this trade, I would likely put my TP right here, because as you can see, price there's because there's a fair value gap right here. This is an FVG. So I'm quite certain price will come all the way up just to tap into this FVG, right? And it could keep on going up, you know. But I'm just gonna set my TP. I'm just gonna set my TP right here. So this guys is about 1:22. This is crazy. This is massive. This is just a 1 hour time frame. You can refine down to a lower time frame like 15-minute time frame, or to a 5-minute time frame. This is a 1 hour time frame, and you're getting this kind of massive ratio. So next up, we're gonna be moving to BTC USD. I've shown you guys that this concept works on commodities. I've shown you guys that this concept works in Forex. So I'm gonna be showing you guys that this also works in crypto. So this is a Bitcoin, and we are on the 4-hour chart. So let's just take a look at this right here. So price was on a bullish momentum, then price suddenly dropped down. Price came all the way down. So price was just consolidating over here. So there was just consolidation over here. So now when you see price going all the way up and there's a sudden drop, right? So when you see price going all the way up and now there's a sudden drop, and the next thing you see is consolidation. So price is just in a consolidation. So now you know price has to, go all the way up in order to fill the FVG. So now you can see right here that there is this fair value gap right here. So price has to come all the way up into this fair value gap. So now we know that after price has come all the way down, price must go bullish. So price has to fill all these voids. Price has to fill this this gap. So let's try to check if we can see any steering breaker that we can, get into. I think there's really no range. This might look like a steering breaker, right? This might look like a steering breaker, but if you actually take a look, this is not a solid range. In order for you to enter into a trade, you need to have structure, meaning price has to have a low, price has to have a high, and price needs to go below that low, price needs to create a high, just like this. So this isn't a range because price was just consolidating. So price was just consolidating. So price came all the way down, went up. I can use this low because it didn't go below this low, so I have to use this. So price started going up. So this didn't even break a high. So on this range, price didn't break a high. So you can't call this a steering breaker. So you can't just use you can't just say, okay, price broke a lot low, so it's a steering breaker. No, it has to be something like this. So price, this last low has to go below this previous low. This last high has to be below this previous high. So it has to be like this. So with that being said, let's try finding a steering breaker. So I think I should find one right. Yeah. So this in itself is a range. Okay, so this in itself is a range, right? So this is a range inside a consolidation. Just stay with me, guys. So this is a consolidation, right? So this is a range. This is a range. So we can find, so all we have to do is just find a bullish entry in this very small range. Now the price came all the way down. We're anticipating for bullish, so we have to look for a break of structure in this range. So now let me show you guys. This is a 4-hour time frame, by the way. So this order block is a valid stepping breaker. So I'm going to show you why in a moment. So as you can see, price broke two highs. Yeah, price broke this high and price broke this high. Let's take a look up close so we can be sure price actually broke the high. So as you can see, price broke this high. So it is a valid stepping breaker. So this is a valid stepping breaker. So now let's set our TP. So just for the sake of this video, I'm going to be using the FVG. So let's just use FVG. So price will surely fill this gap. So this is a 15 risk to reward ratio on a 4-hour time frame. So if you have a long-term perspective, you could actually set this as your TP, guys. This is very crazy. You could set this as your TP. It all depends on how patient you are. So next up, we're going to be checking this right here. So price has been coming all the way up, and price is on a bullish trend, right? So price has been coming all the way up. So price went up, retraced all the way down, and kept going up. So as price came all the way down, we know for sure that price is eventually going to go bullish, because price all the way from the bottom has been going all bullish. So price retraced down to this point. So it's now left to us, to find a way to get into the market. So this right here is a stepping breaker. So just tell me, guys, this is a stepping breaker. So price broke this high, then price broke this high as well. If I were to get into this trade, this would be my TP. This will be my TP. Just for a second, ignore all these charts. Just look at price from this perspective, right? So price has been coming all the way up, price retraces all the way down, price will definitely go up. So this will be my TP. This should be your TP if you're gonna get into this trade. So as you can see, price respected this order block, and price, the instance price broke this high, you can see price came all the way down, but this stepping breaker did delivered, right? It delivered on this range, because this is the range where you can use this stepping breaker, so this would be your TP. As you can see, price came all the way down, price delivered before price came all the way down. So we're going to moving on to our next example. Now this is still the 4-hour chart. So as you can see, price has been going all the way bullish, right? So price expanded all the way up, came down, retraced, and kept going bullish. So price starts, coming all the way down. So this is where I want us to focus on. So this range in particular is where I want us to focus on. So if we take a closer look into this this range, you're gonna say this order block is a stepping breaker. So this order block is a stepping breaker. So this should be your TP. Like I said in the previous example, this should be your TP. You can't just set your TP up to nowhere. There is no structure above. This is the only TP you've got. If you're gonna set your TP up, it's gonna be at your own risk. So this is the only TP you have. There's no structure above, right? So price broke this high, and price broke this high. So now if you're gonna be getting a pattern, you can see price came down, went up, came down, went up, then came all the way down. So I can use this low because this price was broken by this high, and I can use this low because this high was broken by this high. So I have to use this low, then this high, then price came, I think, all the way down here. So price has about 4 sell stops in this range. I think this other block broke 3 different sell stops, but it doesn't matter because the main point is this is a stepping breaker. This is a very, very valid stepping breaker. So this is your TP. Then if we're gonna set our position, you're gonna see that this is quite a decent risk to reward. So this is actually about 4.3 risk to reward. That's actually good. That's actually great. So now we're gonna be checking out trades where we can find both this stepping breaker and ICT break of structure. So this is still BTC USD. This is a 4-hour chart. This was the last example I showed earlier, and I just want to show you this ICT structure right here. So I told you guys that there are about 4 sell stops in this particular range. This is 1, this is 2, this is 3, and this is the 4th one. But I just want to show you an ICT structure. So this is an ICT order block. So just ignore this section all the way up onto this point. Let's just focus on this area. So price came all the way down. This was a sell stop because price, let me give you guys a pattern. So price came down, went up, down, went up, I think it came all the way down, then it went up, it came down, went up, came down, and broke the structure. So this, let's take a closer look. This isn't even a valid eye. This is the actual eye, right? This is the actual eye. So price broke this eye. And you can actually see that price tapped this breaker structure. Price tapped it out because it only broke one structure. So when I see another block breaking just one structure in the market, I regard that other block as a weak order block. I don't think that order block is a valid order block. So to me, the order blocks in ICT breaker structure is kind of like a weak order block. So you can see price broke this order block. So this is the range we're dealing with, right, on a 4-hour time frame. So like I showed you guys earlier, this is a stepping breaker. You can see price broke 2 different highs. You could include this, right? You could include this to make it 3. It doesn't matter. Price broke this highs and price respected it all the way up and ate out TP. So that's it for BTC USD. So next up, we're going to move in on to USDJPY. So this is a 4-hour chart. You can see price has been coming all the way up, right? Price came all the way up, trades down a little bit, went up, trades all the way down, and so we know price will keep going up. Price will keep going in a bullish momentum. So this is the range where we're going to find our entry. So we're going to find a structure in this range in order to get our bullish momentum. So I'm going to go down to the 1-hour time frame. Let's see if we can have a stepping breaker, and yeah, I think we have our stepping breaker. So this right here is a stepping breaker. So price broke this eye and broke this eye. So you can see this all block right here. So this is a very, very good trade. So this is a good trade. So you can see price came all the way down. So price went up, came all the way down, tapped this other block and kept going up. So this is our TP, right? This should be our TP. Price tapped the TP. So this is a good trade. Let's check if we can see an ICT break structure. So this right here, this other block right here is an ICT breaker structure because price broke just only one single high. So let's take a closer look so we can confirm if, yeah, price broke just one single high. So this is So this is an ICT order block, right? So as you can see, price did came all the way down into the order block, went up, but it didn't hit the TP before coming all the way down. So price stopped this order block out. Why? Because it wasn't valid. It wasn't valid. Even though it was an ICT breaker structure, the order block wasn't valid. You can see for yourself, price went up but did not actually hit the TP before coming all the way down. But this TP breaker, you can see price came all the way down to this TP breaker and tapped our TP. Yeah, so we're gonna moving on to our next example. So this is still USDJPY. This is a 2-hour time frame. So as you can see, price went up, and this is a reversal because you can see price is coming all the way down. So you have in mind that price is in a bearish momentum, right? Price is in a bearish momentum. So let's take a look at an ICT breaker structure right here. So this is an ICT breaker structure. So just on the short term, right? Because price broke this order block right here. So this should be an order block of ICTs, right? But as you can see, price tapped it out. This is in a bearish momentum. This is a bearish momentum. You could use this. You could use this to get into the market, because this is just you can just say this is a range. So we're gonna look for a structure in this range in order to in order for price to keep going bullish. But as you can see, price stopped this order block out because this is ICT's breaker structure. So sometimes you could see ICT's breaker structure working out in the market, but compared to Steven breaker, ICT breaker structure is a very flawed concept of entering the market. Okay, so let's take a look at this Steven breaker right here. You can see price broke two lows, right? Price broke this low and price broke this low. The reason I have confidence that price will keep going all the way down is just because of the higher time frame. You can see price has gone all the way up and price started coming all the way down. So we have this confidence that price will keep going all the way down, even though this right here is a consolidation. All this is a consolidation. All this is a consolidation, but I still have that confidence that price will keep going down. So price broke this Steven breaker. This other block broke these two lows. As you can see, price respected it. Price did not respect this ICT's order block because it broke one low, but price did respect this Steven breaker because it broke two low. So this is a very valid concept. This is in fact one of the best, if not the best form of entering the market. It makes a order block very valid. So you can go look it up yourself. You know, I'm not trying to like cherry pick every single order block you see right here. You can go look it up yourself. You can check it out for yourself. It actually works. It really works. It's more powerful than ICT's breaker structure. It's a very valid way of entering the market. Yeah, so I think this aspect is really important. I have to remind you guys that Steven breaker is just a way of entering the market, which means you still have to analyze the market in order to get your bias, right? Then you can use Steven breaker to get into the market. But nevertheless, there sometimes will be some cases where you find a Steven breaker on the higher time frame, like the one we saw in USDJPY, and you can just simply use that as a form of bias. Okay, so let's say price on the 4-hour time frame, price start going up. Okay, so price start going up, so all of a sudden there's a break of market structure. So there's a Steven breaker right here. So price retrace, price went all the way up and started going all the way down. So this is a 4-hour time frame. You can refine down to the 1-hour time frame. You can refine down to the 15 minutes time frame. You can refine down to like 5 minutes time frame, and try to use this range right here to find structure. So it's just a way of like a double confirmation. So price goes all the way up, you know, price will start coming all the way down. So you can use you can actually use stepping breaker as a form of bias, but only on the higher time frame, only on time frames like the 4 hour, the daily, the weekly, the monthly. When it comes to time frames like 5 minutes, 15 minutes, 30 minutes, do not use that as a form of bias. You have to analyze the market. You have to analyze the market to get your bias. Okay. So I personally feel I have to give you more examples on the stepping breaker concept, but I really want to make this video as short as possible. Maybe I'm going to do a part 2, I don't know yet, but this is the end of the video. So if you like this video, if you find it helpful, please do subscribe and check out my other videos. I also have a video about why I stopped using ICT's breaker structure. That video is also informative as well. So yeah, this is the end of the video. Thanks for watching and see you in my next video.